Hey folks, it's Kevin. In this video, we're going to be talking about self-employed individuals and how to figure out if you're going to be pre-approved for a home loan. As a self-employed individual, your qualification with a loan officer is going to be much like if you were a W-2 employee. There are always three components that go into whether or not you're pre-approved, and that is your income, your credit, and your cash to close. Now, as a 1099 or a self-employed borrower, the one component that's going to be different is your income calculation. And so as a self-employed borrower, you're going to have to provide 2 years tax returns, and it's typically going to be an average of 24 months. And what I mean by that is if you made more in 2020 than you did in 2019, that's great, and as much as you would want to use just 2020 on a 12-year average because that average would be higher, you can't, unfortunately. And if you made more money in 2019 than you did in 2020, then that decreasing income won't necessarily hurt you in most cases. The second thing that you're going to want to provide is 3 months worth of bank statements. And the reason they're going to ask for this is because they want to make sure that you have the reserves necessary to purchase that home, and also that you have cash flow going through your bank. You want to make sure that just because you had income on your taxes, that it also reflects in your bank account and that money is in fact going to you. The third thing that they're going to ask for is going to be a profit and loss statement. So there's 2 different times, and maybe even longer depending on how long your home search is taking, but 2 times that they're going to ask for profit and loss statements. The first is going to be upfront. They want to make sure that your income is consistent on your profit and loss as it reflects in your taxes. So if you have a tax preparer, they can help you put this together. They basically will show all of your income against all of your expenses, and then they'll officiate it on the bottom, just saying, if you have any questions, feel free to reach out to me, as I am their tax preparer or their advocate when it comes to finances. And the second time that they're going to ask for your profit and loss statement is 30 days before closing escrow. So this means you've already located a home, you've already negotiated the contract, and now you're well on your way to becoming a homeowner. Well, during that process, 30 days before closing, they're going to ask for an updated profit and loss statement. They just want to make sure that your income is consistent and that it's not declining despite everything going on. So that's what they're going to cover as far as income. Now, remember, there are 2 other components when getting pre-approved for a home loan. The second component in getting qualified for a home loan is going to be your credit score. And as I mentioned earlier, this isn't going to differ whether you're self-employed or you're a W-2 employee, as the loan programs are consistent and they don't change just because of the type of income that you receive. So when it comes to credit, the minimum credit qualification for most loan programs is going to be a 620 credit score. You can go lower than that. In fact, sometimes you can go 580 or even as low as 500, but be careful. Anytime you have that low of a credit score, typically you're going to get a very high interest rate, and a high interest rate typically is the biggest influencer in your monthly payment. And the last thing that I want is for you guys to have an astronomical monthly payment in correlation to the type of home that you are living in. So I would recommend always having a 620 credit score, and then the highest credit qualifying tier is going to be a 740 credit score. So if you have a 740 or anything above it, just know that you're going to get the best interest rate offered. The third component in all of this is going to be cash to close. And on a standard conventional loan, which is a loan that any bank or financial institution can offer, the minimum down payment requirement is going to be 3% on homes up to $548,000 here in San Diego. Now, if you wanted to jump up in price, you can go as high as $753,000, but the minimum down payment at that point would be 5%. The other thing to consider with cash to close is the closing costs. And here in San Diego, the average is about 2%. Those going to pay for prepaid taxes and insurance, escrow, title fees, and plenty of other fees. In fact, I will link a video down below to another video I've done in the past stating what closing costs are and what you should expect to pay. So I hope that this video helped. I hope that you got a lot of value from it. If you are 1099 and you just had more questions, please reach out to me directly. I'm happy to answer them for you. If you like this video, if it was informative, please like it. Please share it with a friend or a family member, and please subscribe to my channel so that way you can stay posted on any future videos that I create. Talk to you guys soon.